Hello, everybody. Thank you all for joining. This has been an interesting week, and I think we're all very tired, all very concerned. But let me just kick off by saying there's some good things happening over the weekend in the US with the whole banking crisis. Silicon Valley Bank happening over the weekend, and they are looking for suitors. Regional bank, another big regional bank, will be the likely bidder. Hopefully, it won't be a JP Morgan or some other shop like that, but they are looking for suitable suitors to jump in. Again, it is a too big to fail situation. It's the cornerstone of American innovation and startups and everything else. And we're not sure who's going to pick them up, but they're hoping to sell literally today. I did say yesterday, the next 48 hours are critical. It'll be like a US bank or trust or, I don't know, PNC Financial, one of those guys perhaps. But the Fed are also putting together a backstop for other banks that are in jeopardy right now. So this may all blow over. Futures are up, Bitcoin is up, and Bitcoin's very good at sniffing stuff out. So today's story is going to be a big one. We're going to talk about some obscure coins, some historic hacks, what would it take for Bitcoin to be a global reserve currency, correlation between the money supply and the S&P 500, impact of hikes, nuclear fusion reactors, some coins, tokenized stocks, and Tesla visualized as to why Tesla is so far ahead of everybody else. Somebody asked me that question too. So there's a lot here, and the most ever, but I'll go through fast. There's over 60 slides, ladies and gentlemen. So big thank you as well to the team behind the scenes to help me, especially W, for looking into some obscure tokens and everything else. So thank you all for being here. I see you all. Let's go. And of course, none of this is ever financial advice. All these questions as well come from the Patreon community. Thank you all every day. I'm here basically because of that Patreon community. I love being there every day, working with you all and answering your top questions. And I've never seen anything like the breadth of questions today. So let's go. So first of all, from Golf Tragic, what would be the minimum value of Bitcoin satoshis to be able to be a reserve currency? So I don't know if I went on the right track on this, and maybe I overcomplicated it, but let's jump in and look at a couple of things. First of all, I pulled the top 115 global currencies on Earth and then took their current value, their current market cap, and valued it in Bitcoin. So that's step one. And it's kind of an interesting exercise to me anyway. I love these types of questions. But if you look at this list, and this is just the top of the list, I'll share the full list and all the data within Patreon. If anybody's interested, drop a comment below. But you can see the biggest reserve currency on Earth is the Chinese yuan. It's nearly market cap? That's in Bitcoin. It's nearly 2 billion Bitcoin worth of market cap. Sorry, the circulating on the right is that 275 trillion. And there's approximately 7 yuan per US dollar, just to put things in perspective. You'll see other things down the list. In fact, if you scroll down to row 27, you'll see Bitcoin on there. Bitcoin is now ranked the 27th largest currency on Earth. The circulation is about 19.3 million. Currency in sats, obviously 100 million sats per Bitcoin. And it's kind of interesting to see that stat rank as another one. But the other currencies, China, US, Europe, Japan, Britain, Korea, India, Canada, etc., all the way down the line. The second step I took was obviously the most, just for fun, the most expensive currencies in sats, because we're going to turn this all back into sats anyway in a few minutes. Obviously, Bitcoin is the most expensive, but the second most expensive currencies, i.e. this is the highest value per base unit, is worth 3.3 US dollars, and that is the Kuwaiti dinar, followed by the Bahrain dinar, followed by the Omani rial, followed by the Jordanian dinar. And they all tend to be, about $3 a pop each. And in sats, of course, we can't forget the sats. You can see where they pop up there. The Kuwaiti dinar, for example, is nearly 16,000 satoshis. So that's a lot compared to about 5,000 for the US dollar, just under 5,000 right now. Then, just to give you a visual of how big the top currencies are compared to the small ones, if you pull out the China, US, and Europe, and maybe Japan, the rest are crumbs in relation. But also, it's interesting when you start doing that benchmarked against population, it is staggering. In order to save time, I actually ran those numbers too. It's fascinating to see that there's not a lot of currency and not a lot of value that goes around in certain countries. You can guess some of them as well as we go forward, but that is fascinating. Compared to the US, has a huge chunk of currency and only 4% of the population. Next, I looked at some currency stats. So if you look at the sum of all the currencies of what it would take in Bitcoin today, turning the value of all the fiat into Bitcoin, you would need about 6.1 billion Bitcoin to cover that. The average amount of Bitcoin per country for the 115 countries is about 53 million Bitcoin. The minimum is 8. The max is China with nearly 2 billion Bitcoin. So that is kind of fascinating to see. And there's a reason for that is because of this, the answer to your question. And sorry for the long-winded roundabout process, but here, if you look at the number of Bitcoin to support all of the value of all of the fiat today, that would be 6.13 billion Bitcoin. Of course, there will never be more than 21 billion. So I divide that by 21 million, and you get a factor of 292. You turn all of the satoshis based on 21 million Bitcoin into a number, and that is, I always get confused now. I think it's 2.1 quadrillion divided by 292 gives you 6.84 trillion. Basically, the magic number here is you only need 1/300th of the Satoshi supply to act as a global reserve currency, replacing all fiats. And that gives plenty of room for population growth and everything else. And of course, you could also divide Satoshis down further if you needed to, but you don't need a lot. And that's how huge fiat is and how I would divvy it up across all global reserve currencies. If we ever get there, we don't know if we will or not, but after what's happened over the last week, the world definitely needs something a little more stable than fiat. Next question is from Dougie Boy. What are the differences in margin between Tesla's vehicles and the electric vehicles of the competition? I think a visualization can make difference in understanding how far Tesla is ahead. Well, I have tons and tons of visualizations. I also put together some new ones that cover everything, not just margin, but also technology advantages too. First of all, and for those that just want to hear about crypto, this is the most important company of our lives, bar none, everybody. So it would pay for your future to get familiar with Tesla. That's all I'll say on that note. Now, these are some of the advantages, and I pulled in information from different sources, people like Sandy Munro and others, as to how many years they are ahead of their competition across key categories like motors, batteries, FSD chips or FSD within the car itself, thermal management systems, low voltage wiring, high voltage wiring, casting, operating system, and cooling systems like the octavalve. And that sells, and I'm not even talking about, bots or mega packs or any of that stuff, just the core stuff that they have today. And you can see here on motors, they are 4 years ahead of the competition. Batteries, 7 years ahead of the competition. FSD chip, 10 years, according to Sandy Munro. FSD itself, 5 years. And there could be a surprise coming there within a year or two or even less. Thermal management system, 4 years. Wiring low voltage, obviously 1 year because it's basic, but their harness is very sophisticated. 48 volt wiring, they are 4 years ahead of the competition. Nobody else is doing it. Casting, 10 years. Casting sounds easy, but it's not. Operating system, 5 years. And cooling octavalve system, 8 years, because it's integrated to every single part of the car. So that's that piece. Let's look at the competitors from a margin perspective. Margin per car for GM is $2,000, BYD $1,500, Toyota $1,200, Volkswagen $973, Hyundai $927, and Ford minus $760 for every EV that they sell. There's probably a lot more if you take into other factors. Biggest losers, Xpeng, they lose $12,000 a car, and NIO $19,000 a car. I did warn you a few months back. NIO is definitely not financially safe by no stretch of the imagination. And of course, Tesla makes $9,574, the big gorilla in the room. What this looks like in a chart, all of these numbers, GM is the best, with the exception of Tesla, of course, which is by far the best, nearly $10,000 margin per car. But remember, GM is probably going out of business. It's not a question of if, but when. And then you got BYD, etc., number 2. I think the two most formidable players in the future are going to be BYD and Tesla, but even Tesla has a huge advantage over BYD, and that was the very first slide I showed. Then let's look at some other things that I thought were interesting. Maintenance as a percentage of price. Cheapest maintenance car, even against ICE cars, by far Tesla. You can see BMW, 25% of the price goes to maintenance. Jaguar, Volvo, Land Rover. I'm surprised Land Rover beat BMW, actually. That's kind of stunning. I always thought they were very expensive to maintain. Infinity. And it's just staggering. And people begin to wake up to this. Best versus verse, luxury bands versus maintenance. Winner is Tesla Model S, 4.58%. Model X, 5%. By the way, I have a Model X. Nothing's happened to it in over 4 years. Nissan GTR, that surprised me. Number 3, Nissan GTR, that's one solid car. No problems, no maintenance at all. And Tesla Model 3, 6%. Compared to the worst cars, BMW X1, BMW X2, and number 4, BMW X3, and then Mercedes-Benz Metris. Never even heard of a Metris, but that's important. When you look at a car, you've got to look at total cost of ownership. Now, circling back to margins, this is from Troy Tesla here. You will see what Tesla have done when we look at these numbers here, like these guys. They have slashed their prices by 6 to 15% all across the board. And if you're selling a car for, say, $50,000 and you take, say, 10% off, that's a huge chunk of margin that you're taking out of the competition, because they have to chase you and beat you. So all of these guys will probably go negative within the next year, I imagine. And that's why it's so important. But considering the price cuts that Tesla have done, this is a very important sheet to look at. You can see the big number I'll be looking at for Q1 of this year, not necessarily the sales, but can they even get close to 20%, or can they beat 20% gross auto margins? If they could, that would be huge. You can see they make a lot more margin on Model S, Model X, standard range Model Y, performance Model Y. They're all the big players, but they basically break even almost on Model Y long range and standard range. So interesting economics. We don't know where this is all going to pan out over time, but we'll watch it carefully. Final graphic, people are concerned about demand. Well, Europe is exploding. We know the US is off the charts. Everybody just went out and bought them. You can look at the inventory levels in the US. There's none left pretty much. But Europe, these are kind of December to February quarters put together by @Piloli on Twitter. But if you look at the growth in Germany, the blue line compared to the pink, that's just quarter over quarter. Same thing in the UK. People thought, EVs in UK are not going to pick up. Well, they are. France, all of these countries in Europe are up, with the exception of one country, and that is Switzerland. And I hope it's not because of the fallout from Credit Suisse. And fingers crossed that doesn't blow up. Odds are it's looking really ugly over there. So for anybody here in Switzerland, watch out. Fingers crossed everything will be okay. You've got nothing on Credit Suisse. But we'll see. We're seeing a very frail financial system. So thank you for the question. I hope those visualizations gave you an idea of how much an edge Tesla has. Next question is from Flirtatious Oppa. What is your opinion of Tesla one-to-one backed tokens on, for example, app.swarm.com, Collateral and other DeFi, traded 24/7 liquidity pools, and Tesla wrapped ETH and other pairs now possible? So I do love the idea of 24/7 trading. The ARB is fantastic, but there's a lot of problems behind doing this. Let me jump into them real quick. First of all, if you have a choice between tokenized stocks or real stocks, always pick real stocks, all else being equal. If you don't have a choice, then you consider tokenized stocks for very short-term trading. In, out, do your business, get in, get out. Don't hold them long-term. That is extremely dangerous. And as a stockholder, you're protected from the risk that a brokerage firm goes out of business or defrauds customers. Now, for example, the SEC have SIPC in the US. Everybody's looking at SIPC right now as they took their cash last week and buried it into other things like Bitcoin and stocks just to protect themselves. That's very, very important. But remember, what a tokenized stock is not the pure form. And real stocks represent real ownership rights, so pure form always. In addition, Depeg risk is real. Tokenized stocks offer no ownership. Instead of owning tokenized stock, it's essentially a derivative that's backed by actual shares or a peg of the price of stock. You don't even know what you're going to get. And remember, Mirror Protocol blew up. Everybody lost everything. People that had Tesla, the tokenized version of Tesla stock, are now holding worthless bags. That was the Mirror protocol situation. And Mirror, by the way, was apparently much more reputable than app.swarm.com in things that we have heard. I have never used it. I never heard of it until yesterday. But remember, you're just taking on so much more risk. And there's enough risk in the markets already to layer on more. And remember, the SEC is coming for tokenized stocks. If you're outside the US, tokenized assets do offer a use case. But if you're in the US, you should just be buying the real thing. It's that simple. The other advantage that I do like as well is the 24-hour trading window, which is nice, and the use of crypto and crypto pairs. That's all awesome. But in the end, the biggest risk is the SEC, and there's no question that these tokenized stocks are on their radars because they are unregistered securities. And the SEC is cracking down, so just be careful out there with playing with this. There'll come a day where everything will be tokenized and it'll be risk-free, but we're just not there yet. It's still the Wild West. Next question from Games I Play. I was wondering if you had any thoughts, opinions on Unity and their crypto SDKs. Might this be a good way to proxy Web3 games? So you're talking to somebody who knows nothing about gaming, but W, help me with this. So what is Unity? Unity is the most popular gaming engines and development platform out there that we could find. It allows developers to create high-quality 2D and 3D games for multiple persons and platforms, desktop, mobile, consoles, etc. It also has an amazing user-friendly interface. Haven't seen it myself, but I heard it does, and a very robust scripting system. It also has a ton of assets, game assets, skins, tools, plugins that make it super easy for developers to build stuff, and it has different programming languages. I think C, JavaScript, and others. So from that perspective, yeah, it's pretty cool. Let's talk about the SDK real quick. It definitely has one of the most robust blockchain SDKs out there. The toolset allows gamers to develop integrated games into their blockchain and developers to take advantage of blockchain-based APIs, integrate crypto into their game mechanics, such as minting NFTs and connecting DeFi, etc. Imagine swapping your ETH to play a game. Who knows? But I'm sure people might do it. And Unity's SDK allows smart contract integration for things like Ethereum and Binance Smart Chain, I think, as far as we know. And the SDK makes NFT management really easy and simple. And lastly, is one other thing, there is SDK wallet integration. So it works with MetaMask and a couple of others, I think. So again, it is pretty cool, pretty robust, but that's the exhaustion of my gaming knowledge. Let's go to the next question from Starknet. A lot of interesting crypto questions this week. Starknet is building an impressive ecosystem. Please provide an examination from Web3 Me. So what is Starknet? It's always very confusing. Starknet, Starkware, Stargate, a lot of star stuff and Stark stuff. So don't get confused with them all. So Starknet is a decentralized platform for building and running high-performance smart contracts on Ethereum blockchain, and it's designed to address some of the limitations. For example, increased transaction speed and increased scalability. It also implements a variation of ZK rollups that uses a combination of off-chain computation power and on-chain verification. So it's what's needed right now. How it works, real quick, simple little graphic explains it all. It uses what they call a validity rollup, which has a variation of a ZK rollup, and this supports general computation and operates in production as an L2 protocol on top of Ethereum. And other capabilities includes off-chain computations to reduce the load on Ethereum mainnet. Also, it uses zero-knowledge proofs to verify authenticity of the transactions. And finally, Starknet's batch processing and rollup architecture allow it to batch requests and bundle multiple transactions together for faster and cheaper transacting and processing. So it's pretty neat. There are a couple of limitations you need to be aware of. First of all, it only supports a limited subset of smart contracts on Ethereum. Also, there is limited compatibility with Ethereum dApps and limited developer adoption since it's still a new technology. And finally, centralization. is an issue due to the reliance on off-chain computational resources. So be careful of that. Nothing is perfect in this world. Now, there is no token. A quick reminder, everybody. Sometimes people will look at an icon or a token icon and try to buy it, and there's probably tons of fake ones out there, but there is none. Or maybe there is, but market data is untracked. I couldn't find anything on it. So just be very careful out there, especially with all the scams and stuff. I mentioned a year ago some fake tokens, and within hours, they were all replicated on multiple chains. So that's just the nature of the world. So be careful out there. Next question is from Lava Rock 88. What are your thoughts on how the declining M2 money supply will affect the S&P 500? Beautiful question. I've been thinking about this a lot myself, and you made me do all the numbers, which actually doesn't take a lot, but let's go back in history. So this is an old paper, an old study from 2007, and the result of it was the R squared was 87.3, which means the money supply explains 87.3% of the S&P price action. Hard to believe. Again, that's 2007 going back to 1950. Let's look at a little bit more information. Let's look at modern data. And I just looked at the last 15 years because I have all the data going back to 1950, but I thought this is more relevant because of what has happened with the increase in M2 money supply. So first chart I put together is comparing the M2 base money, which is on the left axis, and the S&P 500 on the right axis. S&P 500 is red, M2 money base is blue, and you can see how the money jumped up in early 2020, and we all know why. But even putting that aside, look how it's grown since 2008. It's just always climbing up the whole time. Now, the other thing I would like to cast your eye on is look at the way the blue line has dipped ever so slightly. And that's what we're going to examine a little bit. But the second chart looks at, this is the, again, last 15 years of the correlation between those two assets. Again, on the left, you got the S&P 500. And on the horizontal axis, you got your M2 money base. And I plotted everything. Now you can see there was a huge amount of action that happened when the money supply exploded real high. So the reason there isn't a compression in dots is because the money supply increased so quickly over the last amount of time that it couldn't even keep track. And it takes time for the S&P to catch up. But even that being said, 95.9% of the price action for the S&P 500 is explained by the increase in money supply. Okay? But it gets more interesting. Let's look at the Fed and how they're talking about unwinding the balance sheet. We heard plans of 95 billion to 120 billion kind of a month going forward. And here you can see how they've been unwinding the balance sheet. This goes back to, again, January 2020 all the way to today. You see how the money supply exploded from about 15 trillion all the way up to about 22 trillion. So they added $7 trillion. And I know people throw the term around like, oh, $1 trillion here, $1 trillion there, but $1 trillion is a lot of money. I didn't have the visual here today, but it blows the mind when you see exactly how much money it is. But if you look at how the chart has slowed down, it shot up and then it reduced ever so slightly for a few months, but then it increased some months as well. So what exactly is going on? So the Fed they said they were going to unwind very aggressively. They were going to unwind to the tune of $120 billion a month for the next couple of years. Let's see how they're doing. So this is the actual chart of everything since January 2022. That's when they started saying, we're going to start reducing our balance sheet. They didn't start in earnest till April 2022, and they took about 90 billion out of it. But then in May, the money supply grew. Then in June, it shrank a little bit. It was about 30 billion. And then in July, it grew. And it grew again a tiny bit in August. And then it shrank over 100 billion in September. Shrank a little bit in October. Less in November. And then December 2022 shrank a lot. But then it grew again in January. And it shrank a little bit in February. But the point is, they had a plan of 90 to 120 billion, depending on what they were saying and how they were breaking up the mortgage-backed securities, etc. But the average that they've reduced ever since they said they would reduce the balance sheet is 28 billion versus the 120 billion. So the point is they're having a hard time reducing the balance sheet. And that goes before all the expenses that they have to start paying for, war supplies and all sorts of stuff. Then we have the recent debacle of what just happened with Silicon Valley Bank. They're going to put together a new fund, which should be some type of backstop facility. I don't exactly know where the money is going to come from that. I know there's a debt ceiling. I know they have to increase that. Deficits are exploding. States are running out of billions and billions of dollars. It's all a complete mess. And go back to this chart, everybody. Unwinding is extremely difficult, and they have not been successful. So they're way, 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 way off the mark. And again, with over 212 trillion in unfunded liabilities and funded liabilities, the only way to go forward is to increase money supply, increase printing, etc., etc. So that's kind of where we are. I just thought it was interesting perspective. Back to your case, your question is, yes, it will affect the S&P 500, but they're struggling to do it. And remember, the S&P 500 has a lot of zombie companies that will be heavily impacted by this. But if you are in fast growth names, you can make it, just like fast growth cryptos can make having high inflation too. So I hope that helps. Next question is from Whip. I tend to agree with a lot of experts that think that the consequences of the rate hikes are not fully priced in, and this could result in more pressure on risk assets and impact the post-halving bull run. So there's a lot of stuff to unpack here. Let's talk first about lags that exist. I'm going to touch on some of the issues with where we are. First of all, there's a time lag in transmission. That is when central banks adjust interest rates. It takes a lot of time, typically 6 months, for them to ripple through the economy. For example, 6 months for changes in borrowing costs to be reflected in consumer spending, business investment, housing demand, etc., etc. And I proved in a recent video, housing demand is exactly 6 months delayed from actual interest rate hikes. Second, financial markets are very complex, and there's a lot of stuff going on, both from a macro and micro level. And again, it takes time for investors to adjust their expectations and how they value assets, stocks, bonds, currencies, etc. And then data lags. We've seen how chronic they are. The Fed is looking at data from 6 months ago when we know where things are going. So it's driving good economists crazy when the Fed are measuring things that are completely irrelevant. They're looking at components that only make up 20% of CPI. They're not looking at the real damage that's been done. And back to your question, yes, the most recent hike, it takes 6 months for that to go through the system. So we won't see the damage from the most recent hike until August 2023. So you're dead right there. Now, the bond market is talking dovish, speaking dovish here, and this is globally as well. I thought this was a very interesting chart. You can see how the yields are different from where they were at the end of 2022 to where they are where we are today. In addition, this chart is stunning from the other day as well. If you look at the 10-year, this kind of blew my mind because of all the panic and everything else in the market over Thursday and Friday last week. You can see the truth is markets are looking forward, yes. But if you look at the 10-year, it is currently at 3.69%. It tanked on Thursday and Friday. But if you look at the level today compared to where it was in June, beginning of June 2022, that was at 1.5%. And the 10-year was just below that 3.69%, only 6% below, which is very few basis points. After that, we had 6 rate hikes. And again, the markets are looking forward. This chart tells you exactly how they're looking forward. They expect 10-year to come down, the 2-year to come down, and the Fed not to be able to sustain this high level of rates. We were saying something's going to break. Well, many things have broken, and we just saw the recent catastrophe last week. So that's where we are. I think, again, I have to stress it for the last time, the markets look forward. We know we're close to the top. Early last week, the Fed believed, or the markets believed, 86% chance they were going to do a 50 basis point hike. Now it's completely flipped the other way to 25 basis points. And sometimes some people are even talking about doing nothing because of the damage that's actually being wreaked out there. Again, everything's breaking all over the place. We won't see all the damage until another 5 months from now. So, but then that being said, markets look forward. People get into positions for where the puck is going to be. They position themselves in assets that are disruptive and not just look at the whole stock market in general. So next question is from Kyle V. Regarding the LiveCoin Exchange hack a few years ago, where Russian hackers got in and emptied it. I had Bitcoin on there. Well, I'm so sorry for your loss, Kyle. But back in 2021, I emailed the site, and the response I received was asking for more personal info than I was comfortable in giving, so I left it alone. I realized my Bitcoin is not recoverable, but since the info about where it went should be on chain, is there any info on where it went? Great question. And again, everybody be super, super careful, super vigilant. Like last week, everybody was freaking out about holding fiat at banks and where they could park it for safety. It's just, it takes a lifetime to accumulate wealth and a second to lose. So everybody just really, really be careful where you play, which exchanges you're on, etc. So what was LiveCoin? A little bit of history here. It was a crypto exchange hacked in December 2020. As we recall, hackers were able to gain access to the exchange's infrastructure, manipulate the exchange rates of various cryptocurrencies, and this caused LiveCoin users to lose more than 3.3 million in funds. The exact details of the attack is still very unclear, but it's believed that the hackers were able to gain access to LiveCoin servers by compromising their DNS records. We spoke about OPSEC for your home and the importance of DNS settings, so check that out as well. And this is what allowed the hackers to manipulate the exchange rates of different cryptos. And as a result of the attack, LiveCoin was forced to shut down. The exchange management team advises users not to deposit any funds into LiveCoin accounts and warned that the company would not be able to return hacked funds that had been deposited. Now, rule of thumb is you're dead right. Do not share personal information over email with anybody, even if you know them. And no login credentials, no credit card numbers, no other personal information, and be careful of phishing and social engineering attacks. Now, what you can do is there is a blockchain explorer here, and Bitcoin transactions can be tracked on chain. And since Bitcoin is a public ledger, all transactions can be looked up using a blockchain explorer. And you can do this with the following: obtain the Bitcoin address that held your Bitcoin, or obtain the transaction ID. It's called the TX ID. Either will work. And the TX ID is that unique identifier that is assigned to every single transaction. And go to a blockchain explorer such as btc.com or blockchain.com or blockchair.com. And these websites allow you to search for a specific TX ID or a Bitcoin address. And enter that TX ID, the transaction ID, in the search bar and hit search. And the explorer will display all information about the transaction, including the amount sent and received and the date and time of the transaction, and the transaction fees paid, and where the Bitcoin was transferred to. Again, sometimes you're going to have to jump around as well. You're going to have to look at the transaction. They probably sent it to a couple of other places, but that's one thing that you can do. There's also firms that do this research on your behalf, but I think, in all fairness, it would be very, very difficult to track. So give that a shot and let us know how it goes. Next question is from SB. Sorry, 1 hour long monologue and getting thirsty. Would love to hear your take on nuclear fusion reactors, as it seems like it's closer to becoming a reality. There's been a lot of talk about these, a lot of talk about little mini reactors. People like Bill Gates have made investments in this space. But let's dig in and find out exactly if it is far away or not. So it is one of those technologies that always seems to be coming around the corner, but never arrives. In reality, nuclear fusion at scale is not likely to happen in our lifetimes. We could be wrong, but from the information we see, this is what we think. And nuclear fusion is a highly complex process that involves combining light and heavy atomic nuclei. And this releases large amounts of energy. And while the theory behind fusion has been developed for decades, building an actual fusion reactor is a major technical challenge. And you have to invest a huge amount of money and expense just to create a tiny bit of energy, as far as we know. Now, the difficulties is first Containing the plasma is extremely difficult. Again, it takes a massive amount of energy to heat the fuel to that extremely high temperature in order to create plasma from the ionized atoms. And then a reactor requires the plasma to be isolated from the reactor walls to prevent it from cooling. And in order to do that, superconducting magnets need to be used to provide powerful magnetic fields to sustain the fusion reaction. And that is simply unattainable with current technology. And second, creating and maintaining the fuel mixture is a huge challenge. Fusion reactors require hydrogen isotopes. The problem is creating and maintaining the right mixture of isotopes is extremely difficult, and the tiniest impurities within the mixture can contaminate the fuel and cause the reaction to become very unstable. And we all know what happens after that, unfortunately. There is one other thing as well with other problems. The problems is the practicality and cost efficiency. Nuclear fusion requires temperatures in the millions of degrees Celsius, and this requires burning a lot of energy to produce and sustain such temperatures. And while we can achieve the high temperatures, current technology doesn't allow fusion to be net energy positive. Hence, the challenge is also to figure out how to produce more energy than is required to sustain the reaction. And finally, managing the neutrons produced by the reaction is currently unattainable. With our current technology, fusion reaction produces high energy neutrons, which damages the reactor and creates radioactive waste. And we currently we have not discovered the right materials that can withstand these intense neutron flux and safely contain the reaction. Not to mention having effective methods for handling and disposing of the radioactive discharge from the nuclear fusion. So from our perspective, solar is the way. We got that nuclear fusion reactor in the sky. Just need to find ways of pulling it in at scale and storing the energy at scale. That's the easy, quick way and safe way. And it's unlimited. So that's where all the focus should be, not in this direction from our perspective. Next question. Tuna Santos, how are you, buddy? Even though mortgage rates are at 7% in New Hampshire, would it still be worth buying a home due to the rate of inflation be higher? My rent went up 8.5% this year alone. So let's dig into this. And the way I'm going to approach this is the way anybody in the world will research whether to buy a house or not. It's all the same. We're just going to dig into New Hampshire. So I know nothing about the New Hampshire real estate market, so I had to go learn. So first of all, it is on fire in a good sense, not like California, but it is going up in value. New Hampshire home values now on average are $421,000, up 9.8% over the last year. And it's been a rough year. And for it still to come out net positive is huge. Let's look at the case Shiller. There is a case Shiller for every state. That's the average home price in New Hampshire. And you can see here that it is just going up and to the right. A slight dip, but still net positive for the year. As we go forward. But what the real takeaway here is to look at the gains over the last 10 years. It's gone up 96%. And that's an important number. Your home value has doubled. So imagine you buy a house for $100,000, you put 20% down. 10 years later, that's a $200,000 house that only cost you $20,000. And you have $120,000 in equity if you're an interest-only loan for 10 years, as an example. Let's look at what happened with mortgages and a little bit of history too. This is 52 years of 30-year mortgage rates. And I know people are kicking and screaming, saying, oh my God, mortgage 7%. But when I did my first real estate transactions, I was dreaming of a sub 7.5% rate in the 90s. Dreaming of it. And here we do have kind of the average rate since 1971 is 7.75%. And we're still under that. And I do believe rates will come down. But even if you snag the right property, we know, as I showed you in a previous chart, the 10 years coming down fast. Okay, that means you'll be able to refi in maybe 1 year or 2 years or 3 years, or whenever something really breaks, causing the Fed to pivot and cut hard and then stimulate with the money supply. Actually, it just occurred to me that all the questions today are all tied together. Remember, money supply, interest rates, mortgages, real estate, stock market correlation. Everything is connected, like I said in yesterday's theme. Okay, let's look at some numbers here. So the one on the left, ignore that. The only reason I put those numbers in for you is to show you what it would have been like, the delta in your mortgage cost versus everything else if mortgages were at 3%. And you can see here the total, instead of having 7% mortgage, 3%, your savings from renting is a negative 794. So it'd be cheaper to buy. Now, what I did was I created a model for you. Look at the table on the right. This assumes an average home price of $421,000. You put 20% down. Your mortgage is a 77%. I just realized and learned today that property tax is the fourth highest in the country in New Hampshire at 1.77% of the home value. Then you got your insurance, your maintenance. I always calculate maintenance as 1% of the home value. So if it's a $400,000 home, it'll cost you $4,000 a year to fix stuff. You'll have utilities, etc., and your mortgage interest. This is the high part here. Your mortgage costs per month are about $22.41 versus $14.20 at 3%. So it's not that horrendously different. And remember as well, your net cost per month of home ownership is $3,500, but it's your castle. Yeah, you might be able to rent an equivalent home for $3,000 or the same, $3,500. Those are the homes I looked up. I was looking at Zillow. Do that as well. You can look at a home, say 2,000 square feet, 3-bedroom, 4-bedroom, and you can look at what it costs to rent the same home in the same neighborhood. And literally, it came out pretty close to this. So this 2,000 square foot home that costs $421,000 would cost you about $3,500 to rent. But it's yours, and you got the chance for it to double in 10 years if history repeats. So basically, the other key factor here that some people don't take into account is you get a tax credit for paying mortgage interest. That's worth about $8,000 a year. And that brings your living cost per month of owning your own home to about $3,500, which is the same as renting. So don't let short-term high interest rates put you off, because you can see you just have to eat that $700 for 1 year, 2 years, and then rates will come down again. Then you do refi. When I was doing real estate more actively in the 90s, sometimes I was refinancing every 18 months. So that's just the part of doing business, and it can be very lucrative. Next question is from Kamikaze Creations. You often say your asymmetric bets on stock and crypto you are following is over the next 8 years. Why 8 years? So first of all, I always try to make plans. 20 years ago, more than 20 years ago, I made a plan to retire by 50, etc., etc. And that comes from starting my career in Switzerland, where they planned everything long term. Everything was, the minimum was a 5-year plan, out way further. So the reason I take 8 years right now, and in 2020 I would have spoke 10 years, because we need to get through 2030. So if you had 8 to 2023, that'll take us to maybe 2031. But the point of all of this is really what's going to happen over the next 8 years. And I'm approximating here, plus or minus 1 or 2 years. But there's going to be huge advances in technology. And these technologies will revolutionize not only many industries and transform the way we live, work, communicate, but it'll also bring about outrageous returns on capital when deployed properly. So if we get ourselves, actually I zoom out for this, get ourselves into the right positions for this actual exponential change, this transformation that's coming, everybody will do very, very well. That's why I'm so excited. We have AI, we have robotics, we have energy generation and storage. Again, we had energy questions today. Biotechnology advances, also in medicine, quantum computing. And again, if we're positioned in the right assets, that will do extremely well over the next 8 years. We'll do very well. And did I mention bots? Bots have the ability to explode GDP per capita to infinity. Elon Musk's grand vision, yes, it's a little bit grandiose, but he believes there could be more bots than humans one day, which would be staggering. So again, the message to you all here is stay healthy for the 2031 party. We got to get to that line. It's a marathon, not a sprint. And we position ourselves for the right things. So great question. Next one from DJ Glitch. Now, this was a deep one. If you had the option of either Elon Musk or Satoshi Nakamoto, which would you choose to talk with and why? So this one is kind of fascinating because the time frame in which it's occurring. Obviously, it would be Satoshi, but let me explain why. First of all, I think I know what Elon Musk would say to my questions, But Satoshi, that would be an interesting one. And some of the things that I find fascinating, especially right now with what happened this week, I should say, is discuss today's backdrop. For example, is this global financial crisis all over again? This is the reason Bitcoin was built. What's happening to the banking industry and with the Fed and everything else shows you we need an alternative. And anybody here thinking about Bitcoin is way ahead of the curve. I'd also love to meet the true person or team, he, she, them, whatever, behind the pseudonym. That would be absolutely fascinating. With some people have a theory on who it is, and I do as well. And how long they were thinking about Bitcoin, or was it all triggered during or right before the GFC? Because to assemble all of that in such a short window of time and create such a beautifully eloquent white paper is stunning. And also, if they were alone, if they did it by themselves. And I'd love to as well know is what their feedback is on success to date. Is it blowing their mind as to how valuable it is and how widely adopted it is? And final question would be, are they disappointed in the world today, the way it's turned out? So that would be my answer. DJ Glitch, great question. Thank you so much. And helping animals. This week, we donate to Red Wings Horse Rescue and Sanctuary. They support care and food, shelter, medical for the following animals. Bright Eyes, a horse breed paint. I should know more what that is. But anyway, the owner was historically unable to care for Bright Eyes, who is now in a sanctuary, fully recovered from a tragic injury, thanks to the help of the Special Horseshoe Rescue. So thank you so much, everybody, for that. Very, very great to be here, and I hope you liked the show. That was a lot of material we went through. A ton. Now, let's see. 47 minutes. Not bad. Thank you all for those who are still here. Let's go to some live questions from the team out there. And one Brydom, thank you for being here. In your option, where's the best place to stake your SOL? And what percentage of holding would you stake? That's an interesting question because I debated. I'm trading a lot. So, for example, in full disclosure, this week, I was like scalping between different things. I sold Bitcoin at around 21.2, bought a good chunk of it back at around 19.8, I think, 19,800. And I also bought Solana at $18. So I was looking at the pair chart between Bitcoin and Solana, and it was the first time it was flashing a buy for the whole year to date 2023. So instead of buying all of the Bitcoin I sold and bought back like 10 hours later, I kept some and put it into Solana. Now, of that, I have a trading position that I keep liquid. I am staking probably 80% of it in a couple of different places, on Ledger, directly on the Phantom wallet, and actually Coinbase has given me some return on some of it too, where some of it's sitting. And that's kind of what I do. But it's just about, I like to have, so I don't get too excited about 5 or 6% per year. When you compare Tradematic and Solana and make that in 48 hours. So that's I like to have things reachable for events that get triggered in my charts. Hope that helps. And by the way, my goals are not your goals, so that wasn't financial advice. That's just how I play the game. Clint Alexander, I'm curious if you know what exposure Canadian banks have to this scenario of potential more bank runs in the United States. Yeah, Clint. So I spent a lot of time in Toronto in the early 90s. This is actually the same time that Greg Foss was there, and he was looking at Royal Bank of Canada problems. And the Canadian banking industry is as frail as the US industry, as frail as the UK banking industry. The UK banking industry was onto the Treasurer over the weekend looking for money and bailouts. Brits said no, US said no, but then we have the problem with Credit Suisse in Switzerland. I mean, everything is exposed. You cannot jack rates that fast, even though it wasn't as fast in Canada, without breaking stuff. So things are breaking. Just be very careful where you have your exposure. I have not analyzed the top banks in Canada in a long time. I did some digging into some of the top ones here with the most exposure. And I will be publishing later today a short list of the banks in the US that have the most exposure. And I'll see if I can find, I'll see if I can do a quick analysis on some of the Canadian ones, but it takes a long time to dig into them. So I hope that helps. Bill Weimers, what's the percentage Bitcoin adoption of the world people holding per global population? So it depends who you ask. And a lot of people, in fact, Blockworks said it was 2.5% the other day. I think it's higher. I think it's more like 4% of the world. So we're still very, very early. We're under that 12.5% kind of early adopter stage. But it's very, very small. And a lot of people actually have adopted it, but they don't have a lot of net worth. So you got people in, say, Nigeria and other places where they have a holding and adopted and they're one person, but they're not moving around 100 Bitcoin or whatever. It's more like a couple of 100,000 Satoshis in some cases. So a lot of wallets. I would love to be able to do analysis of where the wallets are located and how much they hold by country. But I do watch on-chain very carefully, especially the changes. And over the last year to date, especially the last couple of weeks with all this weird stuff going on, I did notice the 10K plus wallets were accumulating. And that was interesting. So somebody with big money has been accumulating despite the nervousness. And I haven't checked over the last 24 to 48 hours, but I'm dying to see exactly what's happened as well. Because I do think, based on the numbers, that people are just pumping money into Bitcoin. Let me look at the chart. When I started, it was doing really well. Yeah, it was at 21,250. Now it's at 21,120. So it's up $750 today, 3.5%. But yeah, adoption is coming, and things like what we've just been through the last week is the best guerrilla marketing you could imagine for Bitcoin. Everybody's now scratching their heads like, okay, where do I put my fiat? Where is safe? How much is it debasing by? Are they going to start printing again? All that. So it's crazy. Long-term holder. I keep seeing big risks to regional banks related to SVB. Why are regional banks in such a bind? Is it due to a smaller deposit balances if there is a run? Yeah, so you have your money centers. So they just have their fingers in every type of business. So they can kind of play one off the other. Then you have a subset of regional banks that cater to high net worth individuals. They are the ones exposure, like Signature, like First Republic, all these names. So they have people, a huge prevalence. Like I think there's about, of the top 500 banks, the top 15, I think 85% of their depositors hold way more than $250,000. They are the ones in hot water because they had to cater to their wealthy clients, which means they had to chase yield. Sound familiar? Yield chasing is dangerous. So they were buying those long-term bonds because they were getting nothing on the short-term bonds, which is what they should have in basic risk management running a bank to make sure you can cover. If all your customers turn up and say, hey, I want my money back, you got to be able to liquidate those short-term bonds, and they shouldn't fluctuate that much. But you have 10-year bonds that you were chasing and you got a very little yield, but at least you got some yield. Then when they jack the rates, the value of those bonds crashes by 30%. That's the problem. That's where the exposure is. And that's what's happening. The big money center banks, they don't have that exposure. And the banks that have just large numbers of small bank accounts don't have that exposure. The regional banks, which are the boutique shops, which actually, in full disclosure, I think they are the best for building a personal banking relationship because Citibank, Wells Fargo, unless you have $20 million, they don't see you as anybody special. But with the boutique bank, you can negotiate special terms. And that's why I think certain people go to them. So that's my simple explanation. Happy feet. My son just turned 18 and we are helping him to become financially independent. That is awesome. He is contributing into a tax-free savings account, TFSA. With everything that's going on, what price would you buy Tesla NFA? So in fairness, I think Q1 will be interesting, but Tesla has so many bright sparks coming this year. I think anything under 180, buy. Even anything under 200, you got to sometimes. And this is a psychological thing. We all like to get things cheap, but if you imagine, okay, Tesla fair value, in my opinion, is $400 based on all the stuff they have coming. So in the next year, I expect Tesla, year to 18 months, at least $400. So if you're buying something under 200, it's going to double. But don't quibble. Don't miss the train for the sake of getting it $2 or $4 or $8 cheaper. If you can buy at 179 or 175 or 181, just pull the trigger. And it might go down to 160, may even hit 150. But I think looking at the chart as well from last week, that 170 level was very, very strong. And during the crisis on Friday, it was one of the few stocks that was up. And Tesla tends to run counter to the market. But that's what I just do. Not financial advice, but it's great because just having just a couple of shares of Tesla will be life-changing over the next 8 years. And I'm working on a video. It'll be very exciting, Happy Feet. So I'm going to fast track that for you and your son. And it's called 8 Ways to a Certain Big Number. So that's kind of exciting. MT, you're the man. Thank you so much, MT, for being there every day. And Deep Random Thinker, what is the compendium score for Caspa and Cadena? They are incredibly bad. Incredibly bad. I think Cadena was under 2 and Caspa was just under 3. So I shouldn't be giving that information, but really bad. And that's why, I shouldn't say it here. I'll say it on Patreon later. Thank you so much as well for your super sticker. Glenn Johnson, Silicon Valley Stoic, Pancake Panda, Marina, how are you? Zeno V, A Bottle of Red, Kiwi Robin, KN, TND Tesla, P. Iron, Modslow, and the Upturned Iris. Jared. Goodbye, everybody. See you tomorrow on DCA. DCA will be on Rand's channel, Crypto Banter, at 8:30 Pacific. That would be 11:30 Eastern, but I will tweet it in the morning early and also let everybody on Patreon know. Thank you so much. Hour-long show. See you all later. Bye.